This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussions is index funds, Palantir, and the Chicago Bears. And you might wonder how these three things connect, and I'll try and tie them all together. So the first concept is I am constantly reminded of why I should be an investor solely in index funds and not individual names. When I finally get to the point of being so excited to put some money in an individual stock, an individual name, and again, the vast majority of my portfolio, if anybody listens to this regularly, they know this. It's a core and explore portfolio. The core is index funds, and then it's treasury bonds. Those are the two cores. And we've got some percentage of portfolio in all these other things, some individual names, a bunch of private equity and venture capital funds. Some of the venture capital funds were harder to get into than Harvard Law School. Not that they've returned better than Harvard Law School, but were harder to get into than Harvard Law School. But I do get to the spot where periodically I decide I will make a decision and put some money in individual stock. And what I will tell you is this, and this is where index funds come to. The latest individual stock I finally put money into, and I've been following it for a long time, was Palantir Technologies. It's a company founded by Peter Thiel. I happen to be a huge fan of Peter Thiel. I think he's a fascinating guy with tremendous courage and very interesting, maybe a little crazy, but God bless him. So I finally put some money in Palantir. And how do you know it's time to go short a stock? Here's how you know it's time to go short a stock. As soon as I put money into Palantir, that stock sank 10%. That's sort of the universe talking to me and telling me, stick to your core, stick to index funds. For every dollar you put into an individual stock, you better put $9 into the S&P index fund and just ride the wave. You're not going to beat the market. You're not going to outperform other investors. Just go with the index funds and don't think you could outdo it. It reminds me, quite frankly, when I pick an individual stock, the impulse to do so reminds me of being in a golf match and suddenly getting in my head that I could hit a shot with a club that I hit once beautifully, but 90% of the time goes wrong. So this is where we come back to index funds, Palantir, and the Chicago Bears. And how do I bring the Chicago Bears into this? We are watching the Chicago Bears again go through the process of trying to pick a coach. And when I look at the Chicago Bears, I think their adeptness at picking an individual coach is similar to my adeptness at picking an individual stock. Both of us, to that degree, are morons. Now, typically, I have the discipline to stick to index funds and treasury bonds and do a little exploring on the side beyond those things. And I have the discipline in golf sometimes to stick to the right club choice and not make stupid choices impulsively like I did with some individual stocks. But the concept here being, again, index funds, Palantir, and the Chicago Bears, both the Chicago Bears often strike out when they hire a coach, and I often strike out when I go after individual stocks. Now, I'm going to hold Palantir for the longer, and I actually say this podcast somewhat a jest, but it is striking to me that the week I buy it, it goes down 10%. I mean, that's karma or something. I'm not sure what it is. Thank you for listening to the Becker Private Equity Business Podcast. What a great pleasure to be with you today. Thank you very, very much.